Why are the world's richest economies suddenly racing to secure the metals that make modern life possible? Why is a $50 billion alliance forming to loosen China's grip on the rare earths powering electric vehicles, wind turbines, and microchips? And how did Canada, a nation once known for oil and lumber, quietly become the architect of it all? The new energy order isn't about who drills deepest, it's about who builds trust. And in that race, Canada is already ahead. Welcome to Geo Capitalist, where geography meets economics. Today, we uncover the $50 billion rare earth alliance that could break China's monopoly, led by Canada. If you follow how Canada's resource diplomacy is shaping the global economy, make sure to subscribe. We publish new analyses every week. 17 metals, 1 market, and 1 dominant supplier. Rare earth elements sit at the heart of nearly every advanced technology, yet more than 90% of global processing happens inside China. Demand is climbing 6 to 8% per year as EVs and renewable power explode. Without secure supply, every clean energy plan stalls. That's why the West is building what economists now call the second supply chain. Canada spotted the need early, embedding rare earths in its 2022 critical minerals strategy long before the term became geopolitical currency. For Ottawa, minerals are not just commodities, they're instruments of national security and diplomacy. Europe and the US now echo that logic, pouring billions into diversification. But Canada's advantage isn't scale, it's credibility. In an age of tariffs, sanctions, and export bans, markets prize reliability. And reliability is what Canada delivers. Transparent regulation, ESG standards, and clean hydropower that turns metal into influence. By 2025, G7 members and partners inside the Minerals Security Partnership had pledged or mobilized roughly $50 billion to rebuild the non-Chinese rare earth network. Canada used its G7 platform to fuse scattered initiatives. U.S. Defense Production Act funds, EU Critical Raw Materials Act incentives, Japan's JOGMEC credits, into one cooperative framework. This isn't a single treaty, it's a financial architecture spanning continents with Canada as convener. Ottawa's approach pairs Western capital with responsible resource nations, ensuring that new projects meet both market and environmental thresholds. While others framed minerals as competition, Canada framed them as cooperation, a shared insurance policy for allied economies. That's why global analysts now refer to this bloc as the Alliance. It's less about rivalry and more about resilience, and Canada authored the blueprint. Years before rare earths hit headlines, Ottawa prepared the foundation. The 2022 Critical Minerals Strategy aligned provinces and private capital under one ESG standard. Projects from the Northwest Territories to Quebec now anchor Western supply. Vital Metals Necalacho Mine, the Tardif Expansion Plan, and exploration zones in Labrador and Ontario. Together, they form a pipeline of responsible feedstock for allied refineries. Canada's model links Indigenous partnerships, provincial permitting, and federal financing into a system others can trust. Europe's automakers and defense firms already classify Canadian supply as green compliant, giving Ottawa commercial leverage beyond its volume. In a world where legitimacy is as valuable as ore, Canada's transparent governance has become the rarest element of all. What makes this framework exceptional is the deliberate balance between environmental responsibility and economic ambition. Each provincial government contributes a distinct strength: Quebec's hydropower, Ontario's industrial base, and the Northwest Territories' geological diversity. But Ottawa unites them under one national vision. Canada's Development Bank and Export Development Canada now provide loan guarantees to lower risk for private investors, turning geology into diplomacy. By embedding environmental monitoring and community benefit agreements into every mining project, Canada transforms resource extraction into a model of shared prosperity. It's not just mining policy, it's foreign policy in action, a blueprint that proves sustainability and profitability can coexist. Enter the European connection. Neo Performance Materials, a Canadian-headquartered firm, now operates Europe's first large-scale rare earth magnet plant in Estonia. Supported by EU grants and a Canadian credit line, the facility supplies magnets for Bosch, Schaeffler, and other German manufacturers. It's proof that Canada's influence travels not by speeches but by supply chains. Neo's expansion plans include heavy rare earth separation, dysprosium and terbium, elements crucial for high-temperature motors. Every shipment from Estonia tells the same story: Canadian leadership exporting credibility to Europe. As one analyst put it, Canada may not refine all the metal, but it refines the rules. The Estonian facility symbolizes more than commerce. It represents the first practical bridge between North America's resource base and Europe's industrial demand. Neo's Canadian engineers designed the plant with near-zero waste processing, powered partly by renewables and compliant with both EU and Canadian environmental standards. That dual compliance effectively creates a transatlantic ESG passport for the magnets Europe needs. Canadian financial institutions continue to back the operation, ensuring that the profits and intellectual property flow back through Ottawa's strategic industries. Each magnet produced in Estonia demonstrates that Canada's leadership in critical minerals extends beyond borders, from the Arctic mines that provide the feedstock to the European factories that assemble the future of mobility. Across the Pacific, the United States and Australia have just tightened their cooperation. In October 2025, they signed an $8.5 billion framework to accelerate critical minerals mining and processing, with $1 billion in joint investments scheduled within 6 months. The BBC described it as a move to counter China's dominance, expanding projects from Western Australia to Texas. The U.S. Export-Import Bank is adding $2.2 billion in financing, and the Pentagon continues equity stakes in MP Materials and other producers. Yet even within this U.S.-Australia pact, Canadian companies such as Trilogy Metals and Lithium Americas are receiving direct American funding, a sign that Ottawa's mining ecosystem sits at the heart of the alliance. While Washington and Canberra headline the deals, the underlying architecture carries a Canadian signature, the Minerals Security Partnership that Ottawa helped shape. Canada connects the Pacific Bloc to Europe's industrial pull, ensuring that every new facility in Texas or Perth ultimately feeds a network designed in Ottawa. In this alliance, some build plants, but Canada builds trust. Beyond funding, the deal underscores the new phase of allied specialization. The U.S. focuses on refining and defense applications. Australia brings vast reserves and geographic reach, while Canada provides the governance model and ESG credibility that anchor investor confidence. Canadian diplomats were instrumental in drafting the permitting and transparency clauses adopted by the partnership, ensuring that all new projects meet uniform standards derived from Canada's framework. This quiet influence explains why, despite being smaller in scale than the US or Australia, Canada's regulatory playbook now guides the broader G7 mineral policy. In effect, Ottawa's standards have become the alliance's operating manual, a silent export as powerful as any shipment of ore. The alliance's combined projects have already lifted investor confidence. Analysts project a 7% global supply gap by 2027. Futures for neodymium and dysprosium are trending upward, reflecting structural scarcity. Yet Canada benefits either way. As refining expands abroad, stable feedstock grows more valuable. Toronto's financing hubs now attract institutional capital seeking ESG-certified exposure. Even rating agencies have begun factoring supply credibility premiums, a metric Canada virtually defines. The narrative has flipped. Instead of chasing demand, Canada shapes it. Investment banks now describe Canada as the safe haven of critical minerals. Pension funds and sovereign investors prefer long-term exposure to predictable jurisdictions, and Canada's record of environmental accountability reassures them. The Toronto Stock Exchange has become a magnet for listings tied to rare earth exploration, making financial markets a direct extension of resource diplomacy. Meanwhile, provincial governments are leveraging these inflows to upgrade infrastructure, northern rail corridors, clean power transmission, and port expansions that will anchor the next wave of exports. Every dollar flowing into this ecosystem multiplies Canada's influence, proving that trust itself is a tradable asset. Global consultancies now rank Canada alongside Norway and Switzerland in resource risk resilience, signaling that credibility itself has become a commodity. The country's conservative fiscal policy and transparent regulation create a rare dual appeal, safe enough for pension capital, dynamic enough for venture funding. Even foreign governments seeking lessons on sustainable mining regulation are turning to Canadian agencies for guidance. As global volatility rises, Ottawa's combination of political stability, clean energy, and credibility transforms its minerals sector into something far greater than a commodity play. It becomes a geopolitical insurance policy for the entire Western Alliance. China still refines over 85% of global rare earths and remains indispensable. But export restrictions in 2024 and 2025 sparked exactly what Beijing hoped to avoid: allied coordination. The new alliance doesn't aim to isolate China, it aims to decentralize risk. Canada's diplomacy emphasizes complementarity, a market where no single nation can weaponize supply. It's quiet deterrence through diversification, and Canada's fingerprints are on every policy memo guiding it. For decades, China's dominance was built on scale and state-backed efficiency, but the world has learned that efficiency without resilience is fragile. When China tightened export permits last year, manufacturers in Europe and Japan turned immediately to Canada for stability. Ottawa's measured response, neither confrontational nor submissive, reassured investors that Canada could serve as the alliance's voice of balance. Instead of reacting with rhetoric, Canada responded with regulation, new transparency requirements, joint stock audits, and clearer environmental disclosure standards. These measures are now being replicated by partners from Seoul to Berlin. Beijing's policymakers now face a market transformed by quiet Canadian diplomacy. Instead of dictating terms, China must now negotiate within a diversified framework where Canada and its allies set the standards of trade. Even Chinese analysts acknowledge that Western alignment is eroding the monopoly's leverage without direct confrontation. Canada's approach has proven more persuasive than punitive, using transparency as strategy and credibility as deterrence. The outcome is a subtle realignment. China retains market share, but Canada and its allies now control the governance narrative. In geopolitics, rules often outlast volumes, and Canada is writing those rules. From 2026 to 2030, Canada's roadmap is clear: expand domestic separation in Saskatchewan, extend the Atlantic Critical Minerals Corridor, and integrate with EU battery value chains. Clean hydropower plus governance stability position Canada to capture the premium green rare earth market. Investors call it the trust dividend. As prices climb, Ottawa's strategy remains the same: steady execution, ethical production, allied cooperation. While others rush to announce, Canada continues to deliver. In the energy transition, consistency outperforms speed. Looking ahead, Canada's influence will extend beyond raw materials. By exporting policy templates, environmental technology, and educational exchange programs in mining sciences, Ottawa transforms itself from supplier to standard setter. The government's collaboration with universities in Quebec and British Columbia on magnet recycling and zero-emission processing shows a long-term commitment to innovation, not just extraction. As these breakthroughs mature, Canada's intellectual property will carry as much strategic weight as its ore. Private industry is moving in step. Engineering firms and startups are developing AI-based exploration models and clean smelting prototypes funded through federal innovation grants. These technologies are attracting international licensing interest, giving Canada a new export: knowledge. The long game isn't about mining more. It's about defining how mining should be done. By 2030, when demand for clean energy metals doubles again, Canada won't just participate, it will arbitrate the flow of trust across an alliance it helped design. And in a century defined by competition for credibility, that may be the most valuable resource of all. And there you have it. If you found this breakdown valuable, check our next video. It connects directly to how Canada's mineral diplomacy is transforming the global energy map. And don't forget to subscribe. Your support keeps us independent, sponsor-free, and fearless. This was the $50 billion rare earth alliance that could break China's monopoly, led by Canada. Thanks for watching, and see you next time.